Hello, this is Dr. Paul Cottrell, and I'm recording this on August 1st. We're going to talk about the tech sector, how it's selling off, this AI bubble, how it's affecting the broader index like the S&P 500 or Russell, and how to maneuver in being able to make some money on this. All right? We're going to play a clip from the tech report. This Ed Zitron, he has a very good pulse on what's going on with the AI bubble. All right. Now, what is interesting is NVIDIA keeps on selling off. Now, why is that? Why does Jensen Huang keep on saying that this is going to be transformative and everyone's going to be using this? And then he says it's going to even be bigger than the regular software industry, which is about 1 point, depending on how you calculate it, but $1.2 trillion industry. And it's going to be way bigger than that because not only will you have humans doing tokens, but you'll have AI agents doing tokens. Well, wait a minute here. Humans buy stuff. If the costs are going to be running way higher than what humans will buy, then you're probably going to have some sort of dislocated market and some sort of market crash. Something doesn't make sense here. First of all, the business models for these AI companies don't make sense. The revenues coming in versus the expenses, they're in the hole. How are they going to fix that? By just increasing volume? That's not going to work. Secondly, Jensen Huang's this idea that, well, the market is, the revenues are going to grow because AI agents are going to be using tokens more than humans. So it must be multiples bigger than the software industry. Really? Companies that are using these AI agents have products and services that they sell to customers. Why do you assume that because they're using AI agents that they'll be able to actually improve their revenues, especially if it's a product company? And if you're going to have so many people dislocated in the job market, don't you think that they're going to hold off on spending? So revenues for companies that offer products and services to consumers, their revenue stream will start to go down. So Jensen Huang's concept here doesn't hold water. And this is part of the reason why NVIDIA is selling off. So you have the business model, that's a problem. At the OpenAI and Anthropic, revenues are coming in much shorter than the costs. The build out of these servers and the hyperscalers, I think they built out too much. Everyone's saying there's not enough, but I think they built too much. And you're going to start hearing that they're going to start cutting back, maybe slowing down on server farms. And if they don't come, if the tech companies don't show earnings that are above expectations, what's going to happen is there's going to be a sell-off. And that's sort of what we're seeing here. So how do you play this? There's a lot of ways to play it. You can short the NASDAQ. All right. NASDAQ will most likely fall faster than the S&P 500. Now, it's important to have some background information here. The last couple of years, the S&P 500 has been in the double digits primarily because of the Mag 7. But this year, the S&P 500 is at around 9% year to date. And the Mag 7 is not contributing to that. Actually, the S&P 500 would be doing better if it wasn't for the downdraft of the Mag 7. So institutional investors, smart money has been moving out of tech. And then you have hedge funds that are blowing up because they bet big on tech. So maybe there's been an overinvestment. Now, I've been saying for a long time here, way before Ed Zitron even showed up to the scene, that there is a curse coming. It's going to start on 9/11, 2026. It's not going to end until 2 years later. So from September 11th, 2026 to approximately October, beginning of October of 2028, there's going to be a problem. Those problems are going to manifest in the world in different degrees and at different time periods. It'll involve economic failure and hardship. It will involve climate issues, droughts, floods, crop yield, so agriculture will be affected, and livestock, and war. Now, think about what's emerging the last year or so. You can kind of almost play back the tape, and you can see on how all these things are emerging towards a potential calamity. A series of things are happening in the world that you could see as a potential curse. Now, think about also pathogenic. Think about what we went through in 2020. Titer levels are going to start to go down through regular infection or through inoculation. That sweet spot is 10 years. All right, but your max level is at 5, and it starts to wane. So around 2029, 2030 is when there should be another spike in cases of the crisis that we went through. It will not be as bad as what we went through, but it should, based on normal epidemiological echoes, historical echoes, it should take place around 10 years from the actual initial wave. Now, if you don't believe me, take a look at what happened in 1918. There was a spike of influenza 10 years later in 1928. Now, what's really interesting here is what happened in 1929 crash? Okay, that was 1918. What happened in 2019? Oh, the beginning of a pandemic. There's an echo taking place. Now, yes, one was man-made, another was maybe man-made, maybe not. But the whole point here is that there is an echo of history that we're already hardwired into. You think you can make decisions that will affect history, you can make decisions that will affect your past. All right, every second is a past. All right, a couple seconds ago was a past, right? And you think you have a optionality, but you really don't, because everything has already been done. All future and past has already been set, but you don't know that. So you're trying to do the random walk, but there's an echo happening here. That's the point that I'm making. And when Rosh Hashanah and the Sabbath coincide, you can't blow the shofar, you can't silence Satan or Satan, and you can't nullify the prosecution. Therefore, there's going to be a curse that's coming. How bad it is, I think it's going to be pretty bad. Hopefully I'm wrong. I want to be wrong. But I have a really good track record. And for the ones that have been paying attention to me, especially on my live shows, if you've been doing what I've been doing, you're going to make some money by just listening to what's going on in the world. So let's go back to tech. There's a bubble that is starting to deflate, but many institutional investors, some of them, are still tied into it. Others are trying to get out. And retail keeps on thinking, this is going to be the best thing. AI is going to burst. Okay, now lots of leveraging is taking place in South Korea with the Kospi index. It's down like 35%, 36%, something like that. The NASDAQ could lose a lot. You're going to be a little bit better off in the S&P 500. Now, I still think at this moment in time that year end, the S&P 500 at the end of the year will rally to about 7,800. I am taking off the table an 8,000 target. I was saying 7,800 to 7,800 to about 8,000. I don't think it's going to hit the 8,000. I think it's going to hit 7,800 instead of 8,000. With that, I have a lower target that year end might be at 7,600. So that range of 7,600 to 7,800. I highly recommend, once we hit that range at the end of the year, that you should put 1/3 of your money in cash. Because I think that the real sell down on tech will be in the first quarter of next year. Now, we will have to reassess. Things could accelerate. It's very possible. But I think there's a little bit more gas with the semiconductor industry and a little bit more gas in funding for AI before it starts to really collapse. Now, because of technology, the speed of news, these podcasts, people are talking about it, like Ed Citron, maybe it will speed up the process. It's very possible. But my gut feeling is it's going to be the first quarter of next year when we're going to see this major drawdown. But it's going to be, I don't think it's going to be as violent as what we saw with the tech bubble. All right, what does that mean? Stay away from NASDAQ longing. You can short it. So you can take an ETF, usually it's 2 times leverage, and tactically short NASDAQ. Now, with specific stocks like NVIDIA has been selling off. This is the chart for the 3-month. So you can see that it has been steadily selling off. All right, there was a little bit of relief rally on Friday, but it's been steadily selling off. Short NVIDIA. NVIDIA is not going, because of the circular financing. What happens when the hyperscalers say, you know what, we're going to slow down? And NVIDIA is shit out of luck. Big problem. Or let's say OpenAI says they can't pay one of their vendors, one of the cloud vendors. What are you going to do? It's going to be a big sell-off. Now, there are 2 ETFs that you can take a look at. One's longing semiconductors. The other is shorting semiconductors, and that's USD. USD is the Ultra Semiconductor by ProShares. That's if you want to long it. I highly recommend not to long it. SSG is to short semiconductors, but both of these are leveraged and they need to be tactical. Don't trade and hold. You got to trade. You have to trade it and then make your profit, get out. Do not hold these because of volatility decay. So the trading range, like for Friday, the trading range for SSG, that's the short the semiconductors, that trading range was anywhere from 12.98 to 14.28. So you put a few hundred shares in, maybe 500 shares, you can make a little bit of profit. And you go in and out, in and out, in and out, in and out. So SSG, watch it. So when there's bad news about AI or semiconductors, SSG will go up. So you're shorting semiconductors. And by shorting semiconductors, SSG will go up. Okay, so what you want is to take a look at that range. That range is approximately, around like 1280, 1270, all the way to like 14, maybe 1430, somewhere in there. Right now it's trading at 1372, so it's in the mid range. So you could buy it, and there's a little bit of there's some room to go up. But if it gets closer to the bottom of 13, that's definitely a buy. If it's in the 12s, definitely a buy. All right. Now, it's very possible that we will see this spike up to, and we did see that on July 29th. It spiked up to 16 and then came back down. So it's probably going to retest that. So it's very possible that a new trading range, instead of like 1275 to 1430, it may end up trading now at maybe at 1375, closer to 16, maybe 1575. So the trading range might be slightly moving upward. So SSG is definitely a way to play the sell-off in tech. Now you can short NASDAQ too. That's another way to do it. Another important ETF is the tech ETF. It's TECL, that's longing tech, and TECS. TECS is to short it. So again, you want to short if you think that this AI bubble is happening, which I think it is. Now, what is nice to see here is this is the short for yesterday. Yes, Friday's trade. So it opened high, and then some news came out and tech was starting to rally, and then there was a little bit of a drop down in tech, in the shorting ETF. Tech was starting to rally on Friday. So with that, again, you got to play the range. Now, the day range here was 71.26 to 78.58. So it's a little bit more volatile than SSG. But you put a few positions in, you put 500 positions in, maybe 1,000 positions in, and you play this range, you do decently. Now for the 3 month, you can see here that the ETF to short tech was starting to go down, so tech was rallying, and then in June it consolidated, and in July, the month of July, it started to go up. So it's following the pattern that July was definitely, people were moving out of tech, moving out of the AI trade, and it's moving up. Now, what is interesting here is that you can almost see the channel that's taking place in that on the end of Friday for TECS, it looks like the bottom of the channel and probably will rally. That means that tech is going to sell off. So that's another way to play it. And then there's SOXL and SOXS, SOXL or SOXS. SOXL is to long semiconductors, it's 3 times leveraged, or short it, SOXS. Now, again, these are leveraged ETFs. You cannot hold them. They're tactical. They're tactical trades. Now, if you take a look at SOXS, so the short semiconductors, you can see in the 1 month chart that it's been going upward. Now it did go back down on, let's say, if you take a look at the week, or let's say the day chart. Okay, for the day chart, this is a short semiconductors. So on Friday, at the beginning of trade, it was down, and then it popped up, primarily probably with NVIDIA and that hedge fund that blew up, and then started to consolidate, and then at the very end of trade, it started to go up a little bit more. Now, SOXS trading range for the day was 45.18 to 55.20. That's a nice trading range to do tactical trades. All right, now if you take a look at the month chart, or let's say the week chart, 1 week, you can see that for the week it was trading up, and then it started to trade down and consolidate. So it's volatile. But if you catch it the right way, if you pay attention to the news, you can benefit from these downdrafts in tech and in the semiconductors. Now, what's the most stable, it seems, to short is actually NVIDIA, because NVIDIA has been having some problems. On the month chart, take a look at the month chart. So they were at the beginning of the month, they were trying to rally back up to about 214. It's now trading at 200. It started selling off at around the 23rd or so. Started selling off, and now there's a little bit of a relief rally. How stable is that relief rally? Well, let's take a look at the three month chart for NVIDIA. You can see that the relief rally on Friday, right? And you can see that it was testing the low that was on June 26th, so 1 month ago. And it's bouncing off. This thing's most likely going to test around 212, so it might go up $12 a share, and then and go back down. So the question is will it go past this point? All right, NVIDIA is going down. It looks like NVIDIA is going down. Now, if you take a look at a year-to-date chart, now you're starting to see the pattern. Okay, in March, in April, it started to go up. It peaked at 237, and it's been a steady decline in doing these undulations. And these undulations, when it goes up, the semiconductor shorting ETF starts to go down. But when NVIDIA starts to go down, that semiconductor ETF really shoots up and makes some money. So pay attention to NVIDIA. There's stress. Smart money is shorting it. Now that's the inside baseball on how to make money on this. Now what we're going to do is play a clip. Ed Citron, I would say, is literally the best guy to listen to when it comes to what is happening behind the scenes with these AI companies and the semiconductor companies and the hyperscalers and all the circular financing, and the business model is terrible. He does a great job. What he doesn't tell you is how to make money on it. That's what I do. I just told you what you need to do. Now, if you want, now that is a trader's point of view. What I just said is trader's point of view. From a long-term investor point of view, if you are in NASDAQ, you need to get out. You need to go into a broad index like Russell 1000, Russell 3000, Russell 2500, something like that, or S&P 500, non-leveraged. If you are at the end of the year, I think it would be prudent to have 1/3 of your money in cash. Not treasury bills, in cash or cash equivalents, like short-term CDs or something like that. But cash or cash equivalents, 1/3 of your investment at the end of the year. That way, you're going to be able to ride it a little bit. Yes, the 2/3 may be affected, but there's going to be a mean reversion once that correction happens. We may see an S&P 500 at about, right now it's trading at 7,490, I think it was, by the end of the day on Friday. 7,489. So it came close. So that for year to date, all right. So you can see the war, and you can see also the tariffs. Now, what does this mean? This means that the S&P 500 is somewhat stable at the moment. People are coming in and buying it, even though tech is selling off, semiconductors are selling off. All right. But like I said, the target for the year end is around 7,600 to 7,800. Once we hit around there, you want to go 1/3 in cash and or cash equivalents, and the 2/3 let it ride. Even if it crashes, let it ride. If it crashes, then put that 1/3 in, and then you get a better dollar cost averaging. And then when it mean reverts, you're making a decent return. But you got to be patient. That's kind of what Warren Buffett does. That's the passive investor method. So I told you one method where it's tactical trading, and another method where it's the passive, what to do. So you do not fall victim of the crazy train that's happening. Now let's listen to Ed Citron. He's going to give the details of like, why is the business model not working? What's going on with the hyperscalers? What's going on with the circular financing? But I do live shows, and I'm trading during the live show. And I'm telling you what I'm doing. I'm going to say I'm going long this, I'm shorting this. If you just listen, you'll make some money. Please share the links, ask your social media to follow me, and help support the work that I do by being a paid member to my Patreon channel and my Substack channel. All these videos are for free. And I also help individuals improve their health by developing a protocol that if you follow and do it every day, you're going to slow down the aging process and boost up your different organ systems where you're going to be healthier and have more vitality. So let's just go over some of those products before we go to Ed Citron. Omega-3. Omega-3 is a supplement that will help to bring down inflammation and control your lipid profile. That way, you're helping your cardiovascular system, and you're reducing overclotting of your red blood cells. And that way, you have just a better cardiovascular health. And with better cardiovascular health, you have better blood flow, better perfusion, and that means your organ systems will perform better, like your liver, like your kidneys, and even your brain. So please go to my store, get the omega-3. Very important. Clarity Factor helps to get rid of brain fog. It will help you to concentrate on tasks and over time improve positive neuroplasticity. So the dendritic connections between your neurons are going to improve. The speed of cognition will improve. You're going to be able to think faster, and you're going to be able to have better memory. Take this every day. Drink it with filtered water. It's a great neural stack. Another great stack that I have to help boost up the immune system and endocrine system, slow down the aging process, is to take ashwagandha root. This helps to control cortisol levels and blood glucose levels. Lignans boosts up that immune system and endocrine system, brings down inflammation, soaks up free radicals. And turmeric also brings down inflammation, soaks up free radicals. Now, by stacking, you can take them separately, but by stacking them, that's where the magic comes in. When you stack these together, you're going to actually soak up those free radicals, keep that inflammation down, improve your immune system, boost up that endocrine system. Now, by bringing down that inflammation and soaking up those free radicals, you're also helping your cardiovascular system and reducing plaque formation. You're helping with brain function by keeping the inflammation down at the cerebral level. And it'll help with joints. Like, for example, if you have arthritis, by keeping the inflammation down. And what you'll notice is that over time, you are actually, because you're improving your immune system and your endocrine system and your blood flow, that you're slowing down the aging process. And you have more vitality. Now, I have structural nanosilver lozenges, very important during the allergy season and the cold season. Or if you're just cleaning around the house, I have it in Manuka honey and in orange splash. Please go to my store, get them, use them. Those secretions will help to protect that oral pharynx. Now, if you are 40 years of age or older, male or female, you can't build muscle as easily as when you were younger. Take Myotrol as polyphenols, flavonoids, and lignans to help with the gene expression to build muscle. Do some resistance training, take the Myotrol. This will also help with the health of the mitochondria so your ATP levels will increase. Now, if you're an athlete, younger or older, you'll also benefit from Myotrol to build strength for your sport. And what you should do is also stack this with the Gladiator barley that I'll talk about later. And lastly, this stack is really important for your immune system and brain function. Magnesium and zinc, super important to take. Not enough people are taking magnesium, and it's important, especially for your immune system, but your brain too. Vitamin C and magnesium helps with the immune system and brain function and helps with skin health. So please go to my store, the-studio-reykjavik.com. Help support the work that I do by getting the great supplements that I offer. These videos are for free, and if you pay attention, I'm telling you how to make some money and how to stay healthy. Now let's listen to Ed Citron. I honestly believe that in terms of this whole tech bubble and the inside baseball of this, he's the best to listen to.
It really isn't about, and never has been about, what LLMs can do. It's about the perception of AI's potential, and thus what extrapolations you can make from that to sell something, to pump a stock, to sign a deal. This is financial innovation. This is getting around accounting rules that really need updating. But that's the AI bubble. The AI bubble is just a series of different ghost stories used to ignore financials. The market dumped NVIDIA on this, because I think they've begun to realize that, oh, is NVIDIA propping up its own revenue? At this point, investing in NVIDIA is a bet on how long the debt markets will support AI. And people are going to go, how did that happen? What happened? And the answer is, no one wanted to look at the truth.
Hi, I'm Isaac. I'm on the technical lead today as a writer of Words of Edit and the host of the Better Offline podcast, Editron. Thanks for coming on.
Thanks for having me.
Save your filings. Are you happy with your grocery? This journey with childhood cancer comes actually in waves. Every day we wake up knowing that our 2-year-old has cancer.
Thanks for having me.
Save your financing is back, and it's better than ever. By which I mean it looks like it's going to be getting a few $100 billion worse than it already is, as NVIDIA has offered to backstop OpenAI for $250 billion, so SoftBank can build Sam Altman another data center. And on top of that, NVIDIA is discussing a deal to finance $350 billion in GPUs to go inside that data center. The big question is, obviously, why is NVIDIA doing this?
So it's actually a few things. First of all, NVIDIA is doing this because there is not enough diverse chip demand. It's the hyperscalers buying it, it's Oracle, and now it's this theoretical SoftBank deal. But this one, I call it the final boss of circular financing, because what it is it's being built by SB Energy, which is a subsidiary of SoftBank. Now, to be clear, this is not the same SB Energy that was originally founded, which was sold to Toyota. This is a different SB Energy that now builds data centers. Now, they're meant to be building a data center, I think, in Texas. So they bought an old 3M plant. That one, the debt's already trading weirdly. But what SoftBank wants this to be is they obviously want to get the money to build this data center for SB Energy. But if SB Energy signs a big contract with OpenAI, then they can take SB Energy public, which will give SoftBank and Masayoshi's son more liquidity. NVIDIA wants this so it can sell $300 billion worth of GPUs. It is the ultimate circular financing. They backstop $250 billion worth of compute costs from OpenAI, can't afford it. No one ever thinks about this. I read every story about this, literally every single one, and not a single one is just like, yeah, OpenAI cannot afford this. OpenAI does not have the money to pay for this. OpenAI does not have the cash. None of that. It's just like, oh, ooh, did you hear? did you hear that they are planning to do this? No, just one ear, out the other, put the AI bubble in the bag. And so this is just everyone, just the snake eating its own tail while also eating another tail with another snake eating its tail. It's utterly ridiculous. And another place where the tech and business finance media have just failed. They don't bother to actually push back on this stuff. And they just say, wow, that's crazy. I just want to be clear, though, this deal is near impossible. Because if we think of it like this, they said in the journal's piece, I think they were going to build 800 megawatts by 2028. No, they are not. Just let's start there. No, they're not. SB Energy's never built a data center. Also, they are going to have to raise probably, the GPUs in that, probably $30 billion worth of debt at a time when credit spreads on data center bonds are somewhere between the toilet and hell. CoreWeave's currently trading at 900 OAS or more in some cases, which is just basically the death zone. If you get over 1,000, that means that someone in the comments is going to beat my ass over this. It just means they don't think you're going to be paying. CoreWeave just had to pay another, I think, 3%. They're paying like a 9% yield on their latest debt, which is insanely high, higher than pretty much all junk bonds. All of this is to say is we are in the worst possible environment for them to be raising this much money. Even with NVIDIA's backstop, we are in a terrible environment to do this, but also, how will this come together? Again, no one seems to want to think about any of the messy details of like what could possibly happen here, what would actually be the process where this would happen. Everyone on Twitter is, of course, hallucinating, be like, yeah, they're going to do 10 different SPVs, and they'll do the SPVs. It'll be perfect, and everyone will love it, and BlackRock will back it, or Blackstone will back it, or someone will back it. It'll be fine. It'll all be fine. And it's just we're in this hysterical era where no one wants to talk about the fact that NVIDIA clearly doesn't have diverse enough demand to sell normal amounts of GPUs or enough GPUs to please the markets. So they have to engineer these insane deals. That this is not. People really want to varnish this and say, well, it's what's necessary to build the infrastructure for the future. But it's just like, no, it's what they're doing to financially engineer NVIDIA's eternal beat and raise engine, which is a quote from Kakashi, an analyst. It's like all they care about is beating analyst estimates every single quarter so the stock number goes up. Yeah, at the moment, NVIDIA's stock's not cooking quite as much as it used to be. It's kind of recovered a bit, but in this week it's got its arse beat.
How much of the NVIDIA valuation do you think is pumped up, like you say, by that circular financing?
A lot.
It's hard to, so stock values are kind of disconnected from reality. So it's not like number go up linearly based on actual revenue. That being said, I think a great deal of its value is based on its belief, on the mistaken belief that NVIDIA is growing naturally, that its growth is coming from diverse sources of revenue versus I think like 50-60% of its last quarterly revenues were from 3 companies. Definitely its accounts receivable that were that high as well, which is money it's not things it shipped without being paid for yet. And I think that I'm very curious to see in a couple of weeks what their earnings say about that further customer concentration, because taking a step back even then, when you remove the hyperscalers, they're still sending tens of billions of dollars of GPUs to Nebius, to Iron, to CoreWeave as well. I can't believe I forgot CoreWeave for a second. Our least favorite company. And the argument against this would be, well, the check's clearing. The check's clearing, the money's real. And the money is real. But if this stock is being valued based on the idea that this company will keep growing and growing in perpetuity, and even further and further and further, then that value is exaggerated because that value is based on debt. Everything is based on debt. No one is buying GPUs other than I think Microsoft at this point out of existing cash flow. Meta was right on the edge, like 800 million free cash flow. As opposed to like 8 billion, I think, the quarter before. Everyone's running out of money. And the funny thing is that everything's becoming more expensive too. So NVIDIA has this high bandwidth memory on the GPUs. That's getting more expensive. They've got their LPDDR5X RAM inside the servers. It's also getting more expensive. They put like 17 terabytes of high bandwidth memory in a 72 GPU rig. Everything's getting more expensive. Everything's getting more expensive, and everything is requiring more and more debt at a time that the markets are saying, I don't know how much AI debt I want now. And so, yeah, if NVIDIA is valued based on the belief that this will continue to grow and grow and grow, I don't know how well placed that is. At this point, investing in NVIDIA is a bet on how long the debt markets will support AI. It's not really about whether NVIDIA is building things or innovating or creating good stuff. It's about how long can the FOMO continue and how long.
And the problem with Jansen Wang, what he's saying on the business channels is, well, we're going to have AI agents that are going to be using tokens at such a high clip relative to humans. And again, it is deep. I've been complaining about this whole AI issue. When you decouple labor and capital, it causes problems. And he's justifying individuals are going to buy more chips because there's going to be more AI agents just automatically pinning. You know, these agentic agents are just going to automatically pin. Well, wait a minute here. Really? Someone's going to have to pull the switch and say stop when these companies that are using the AI agent start to see declining revenues. They're going to want to cut their expenses. See, you can't decouple labor and capital. The system doesn't work. How do you pay the debts if you decouple labor and capital? Jansen Wang isn't as smart as people think. He's causing negative externalities that he has no understanding of. And most of these tech bros, they're pumped up in the media. They think they know it all. And the thing is that they're going to hurt people. They're going to hurt individuals in investment accounts. People are going to be retiring soon, especially some of the baby boomers. And they may see a drawdown on their portfolio of 20, 30%. Think about that. That's a substantial sum of money if you've been accumulating over the years for retirement. Sam Altman doesn't care. Jansen Wang doesn't care. Okay, so this whole, we're going to have all these agents just automatically generating tokens. Really? Okay. But the people, the companies that are running these LLMs, they're not profitable. So you're going to spend more, people are going to spend more on tokens, but yet every time you run a token, it costs more than actually the revenue. So how's AI going to make OpenAI going to make any money? How is Anthropic going to make any money? Oh, they're going to have to charge more. Do you really think a business is going to say, yeah, I'm going to give you all this money, Anthropic? No. This is the reason why. It's a big circus out there. Jansen Wang saying this crap about AI agents, justifying high tokenization usage. He knows that it's starting to collapse with the chips that, like Blackwell and all these H20s or H200s or whatever they're called. Are they really selling these? Is there such a large demand? If so, then why did he say that they're developing a chip for the PC market? Because he actually sees that the server market is going to collapse. So for NVIDIA to survive, they have to have a PC chip. And that's why they're moving that way. I thought that everything was hunky-dory with these hyperscalers, Jansen Wang. It's not. Mankind can only absorb a certain amount of technology. We can design stuff, manufacture stuff, especially in tech, way faster than what mankind as a social animal can absorb. That means that all of this hyper fluff in the market for these companies, it's going to deflate because mankind cannot absorb it from a socioeconomic level, from a psychological level. And some of these business models don't even make sense. If you presented these business models in business school, let's say at HBS, at Harvard Business School, and you submitted the business model for OpenAI, and people were actually scrutinizing the business model, you'd get an F because there's no money in it. It fails. But everyone thinks it's going to make it. Now, wait a minute here. Now, there was just a big sell-off of a hedge fund. This whiz kid that invested, blew up his hedge fund. He betted a lot in the AI craze. What was his name? I think he was 28 years old. What was his name? Hedge fund. Ashen Brenner blows up an AI hedge fund worth $45 billion, and almost lost all of it in 1 day or 2 days. Where's the risk management? Oh, he's too young to understand risk management. See, these people, they're hubris. The same crowd that played the Bitcoin, not understanding monetary policy, not understanding the sovereignty of countries, not understanding history. They know better. The youth know better. Really? How's Bitcoin doing? The youth know better about the AI revolution. Well, there will be an AI revolution, but it's going to be nowhere what it's being sold as right now. And it will take decades for mankind to be able to absorb it. Now think about this for a second. Go back 10 years or 15 years ago, what the tech bros were saying, how they were going to change your world. How much has it changed? It changed a little bit. My internet's faster. It's just changed your world. Let me give you an example. This monitor, these two monitors here, are Apple monitors. Most of my system is Apple based. So for my trading. So these monitors were designed in 2004. 2004. They're working perfectly. I don't need a new monitor. Maybe I can get a higher resolution or a bigger one or whatever. But if you design something that has the aesthetic appeal, proper aesthetic appeal, and is built well and functions well, it can last for decades. So how are all these tech pros going to just change my world? Really? 15 years ago, roll back the tape and all the tech bros and how they're going to change your world. Did it really happen? No. You know why? Because mankind can only absorb at a certain pace because of the money available to adopt the new technology and just the social acceptance of it. We can't absorb AI like Jensen Wang is saying. And if you think I'm wrong, prove me wrong. Prove me wrong. Because what Jensen Wang's saying isn't going to sell. Isn't the way the world he sees is not going to sell. How many businesses really need a digital twin? You really need your whole operation digital twinned? Like Siemens and NVIDIA, they partnered up together to create these factories that are all digitally twinned. Well, wait a minute here. If you're a manufacturing engineer and you use CAD, you already have the plant digitized. So you already move stuff around in a digital environment. Now, some of it may be AutoCAD related, where it's more architectural. Some of it may actually have three-dimensional machine equipment that's in place in a digital world. And some companies, they get even fancier. They do the CAD, they export the CAD in Unity 3D. So they use like the Unity 3D graphics engine for a virtual reality environment. What's NVIDIA going to do for me if you are a manufacturing company? You absolutely need to digitize it. Also, in each little node in your factory is going to be an AI agent. Really? Siemens is saying, well, we can have a machine that can adjust its cutter paths, adjust its fixture, so it can reduce the adjustment of a part. Like, for example, parts are made. You have a part, let's just say it's a air turbine blade, and you're making thousands of these. And you have cutters that are in a tool changer, and that tool changer will automatically change the tool and do all these operations to cut this wind turbine blade or this aircraft engine blade. And after 1,000 parts, these cutters start to wear down. Well, just have a human being, when they're measuring the parts, once it gets slightly close to out of tolerance, change the cutters. And these cutters usually have inserts, so you just change the insert. So all you really need is a quality engineer. You don't need an AI agent to say, oh, it's out of tolerance, change the cutter. Really? How much money are you spending for that common sense recommendation from AI? See the point? See the point I'm making? We don't need it. We don't need most of what Jensen was saying.
Prop this market up.
So all around this kind of thing, we've covered before sort of how a massive chunk of Microsoft, Google, and Amazon's cloud growth is just OpenAI and Anthropic kind of handing their own cash back to them. And Microsoft and Amazon valuations just shot up based on that cloud growth just very recently. So again, asking a very similar question to the last one, how much work is that circular cash flow doing for these companies?
So I've been a busy boy. I've got a Bloomberg terminal now, so I'll go look at all the little analyst notes. So UBS analyst found he estimates that 27% of Google Cloud's revenue in 2026 and more than 48% of Google Cloud's revenue in 2027 is OpenAI and Anthropic, which is crazy. 13% in Barclays actually said 13% of AWS revenue in 2026 and 18% actually over that in 2027 is Anthropic and OpenAI. Most people don't know that OpenAI pays, like $7 billion this year, $8 billion, more than $8 billion next year to Google Cloud. Not a commonly held fact. I just found this out. Point is, we are talking about $50 billion of revenue in 2026 and 124 or more billion in 2027, just on Google Cloud and Amazon Web Services from OpenAI and Anthropic. That is before we get to the tens of billions of dollars that OpenAI spends on Azure. So the point is, everyone's kind of they're kind of like getting off the first principles as they read these earnings, saying, wow, AWS, wow, Google Cloud, wow, all of these things are growing so fast. And it's like, at just the same time that Anthropic and OpenAI are spending more money, what could that be? And I don't think investors know. And we have a broken SEC. We don't have good regulators to push on this, but they should have to disclose this, because I believe that the majority of cloud growth in these companies is coming from OpenAI and Anthropic, who cannot afford to pay them, as evidenced by the fact that both Amazon and Google both agreed to fund Anthropic again, to the tune of, I think, about a total of 40,
and because
$50 billion.
Anthropic and OpenAI are showing stress and being able to afford the build out, being able to process all of the queries, NVIDIA has to go, don't worry, server farm, we'll help you build it out. You can use commercial credit. They'll use fancy terms like, we'll buy into your a special purpose vehicle, your SPV, and we'll invest in it. Well, that's an off the balance sheet situation. What does that sound like? Well, wait a minute. If it's not on the balance sheet of NVIDIA, then everything's kosher. Well, no, you're creating systemic risk within the industry. It's going to blow up. So it's a combination of fakery like Enron with the special purpose vehicles and trying to cleaning up your balance sheet. And that sounds a lot like during the Lehman era, where, well, you just sell a group of mortgage-backed securities to another investor, the bank's fine. Not understanding that there's systemic risk, not understanding that there's contagion. And there's contagion in what Jansen Wang's doing. He's not as smart as he thinks he is. And he sure as hell is not as smart as what some of these investors think he is. It's a major problem. Major problem. Now, Ed Zitron, he's not an engineer. He doesn't understand what Jansen Wang's doing with this whole digital twin stuff. Right? He doesn't get the details. And when you know the details, it doesn't make much sense. Because you can't over-parameterize a car. Because if you try to over-parameterize a car and you load in a new surface development by the studio, then voila, it just automatically updates. No, it doesn't. No, it doesn't. It crashes. And engineers have to go in and fix all the damn parts. A fully parameterized car is impossible. And what Jansen Wang's saying, but he's not using the same terms, is that your digital twin, your digital operations of the floor is going to be so hyper-parameterized that you can load in a new sheet metal part and the robots will automatically configure digitally to know what the angles should be for the spot welding. Really? Really? It may get you maybe 60% there, but you're going to have to tweak it. And you're going to need someone to undo it. This is very the same problem that people are talking about with vibe coding. With vibe coding, yeah, it could create the code, but it has a lot of bugs in it. It's not as efficient. Same thing's going to happen on the shop floor. When you load in a new sheet metal piece, maybe a firewall for unibody, maybe an A pillar or B pillar, you change the shape, you bring it into the digital twin, and the robots will be newly configured in such a way it'll tell you where the pickup points are and blah, blah, blah. And then all of a sudden it doesn't work, or it's not as efficient. It goes in circles 6 times and then picks up the part. You can't vibe code it. So the problems that people are talking about with vibe coding is the same problems you're going to see with this over-parameterizing of a digital twin for the shop floor. It's not going to work. I've seen a lot of promises from tech companies talking about over-parameterizing, and they always fail. Always fail. For example, even in CAD now, you can have a nice surface, right? And you can build out the other half of it, so you have the outer shell of it and the inner shell of the part, and then maybe some ribs if it's an injection piece, maybe some componentry that's attached to it. And then let's say you want to just change a little piece of the outer surface. So you roll back the history and you modify it. But in some surfaces, you may modify something where there may be a pinch point. It's not... the topology of the surface is such that it doesn't want to update, and it goes into an error. That's a simple example of what would happen with the digital twin over parameterizing a shop floor. Jansen Wang doesn't know what the fuck he's talking about. Now, Ed Zitron is too inexperienced to understand what I'm talking about. He's not an engineer. But the thing here is, the big point from an investment point of view is NVIDIA is selling a bill of goods that people don't need, a lot of people don't want, and the stock price is way too high. And a lot of companies are wrapped into this whole circular financing that will eventually crash. And the journalists out there and a lot of the podcasters, they don't understand the details of this.
(2026), on top of the money that I think Microsoft put money into Anthropic as well, it's the snake eating the snake eating the snake. And it's frustrating because people looked at these earnings and they're like, wow, AI is finally paying off. It's like, no. In the first 6 months of this year, Anthropic had remarkable growth. And what a surprise, Anthropic's core compute providers saw remarkable growth. What could it possibly mean? What possible reason could this happen? Again, I have looked through the earnings calls. I've looked through every article about earnings. I've looked everywhere, and no one is talking about this. And the thing is, this is going to keep expanding until it doesn't, until it gets to a point where the air runs out of these companies.
And also, this is the reason why I keep on saying that this whole AI bubble is like 1873 and the railroad trusts and how they crashed. It all stopped when the financing stopped.
Because without an eternal flow of venture capital, Anthropic and OpenAI cannot afford to pay their bills. And without OpenAI and Anthropic paying their bills, Google Cloud, Azure, and Amazon Web Services will not grow. Amazon guided revenue guidance for Q3 down this next quarter. That's a fumbled point, but you get my point there. They think things are slowing, and the reason is because the rest of the business probably isn't doing that well. It probably is not growing that much when you remove Anthropic and OpenAI. And we're just in this position where the market is running based on almost childlike beliefs in reality. They just think that there's all this diverse demand, even when there's evidence, even when there's obvious evidence. And it's because these companies are allowed to get away with murder. It's because these companies are allowed to do whatever they want. The investors don't push back. The SEC doesn't push back. And in the end, when OpenAI and Anthropic are gone, when they can no longer just be bankrolled by venture capital and debt, I think we're going to see all of the major cloud platforms retract. Yep. And people are going to go, how'd that happen? What happened? And the answer is no one wanted to look at the truth.
So if we get back to the NVIDIA deal, we have gone through the specifics a bit already, but I guess the question is what does this deal represent more broadly?
It represents that I believe we're coming to the end of this. It represents an outright desperation in NVIDIA. It means that NVIDIA believes that it does not have enough demand long term to satiate the estimates of analysts, to satiate the hungry investors. And it's really, the stock had a brief run, but it dipped close to 190 this week. So NVIDIA's a bit scared.
But he's not talking also that with all of this fakery with the actual demand for the chips and the increased prices of chips in memory, everyone's just purchasing because they're afraid that there's going to be a huge shortage, that there's hoarding that's going on. Now your devices are going to cost more. Your laptop, your desktop, your cell phone, your iPad, all these devices are going to cost more because of the hoarding that's taking place. Another one that's going to crash is Micron. And they're like going, do we really want to make more manufacturing to produce more of these RAM chips? They're debating because they kind of see that this is probably going to blow up. Stupid. And so what they've done is that they spent a lot of money unproductively that's leading to inflation. What Jansen Wang, he's a billionaire now, but he's inflated himself into a billionaire while everyone else now can't afford their iPhone. Thanks, Jansen Wang. You're such a smart guy. You're such a smart guy.
What's funny was NVIDIA last year did the $100 billion deal with OpenAI, which never happened. And I think that it's kind of like watching.
I started a business to give old clothes a new life, and Chase has supported me from the beginning.
Pursuing your thrill requires clear vision. Smith Optics makes it simple. You get premium, outdoor-ready prescription.
And I think that it's kind of like watching
Now,
Metallica play.
think about that advertisement where that for Chase, that advertisement where this woman set up a business where she's taking materials, grinding them up, recycling these materials into fabric to make clothing. All right, so you need to bring in material, collect, use material, grind it up, be able to spin it into fabric, spin it into yarn or threads, and then make fabric to make clothing. How much of that business really needs AI? It's a great idea to reduce waste and to recycle and all this stuff. It's a bad idea because you're increasing exposure of microplastics and nanoplastics, but that's a different story. But how much of that you really need is AI? And that's labor-intensive, cost-intensive type business that woman was advertising. How much of that really needs to be AI? See my point? Most of the GDP in this country doesn't need it. And better yet, it can't afford it.
Just like well, we've got to get the audience back into this, except the market dumped NVIDIA on this. Because I think they've begun to realize that, oh, is NVIDIA propping up its own revenue? Yeah, at the same time, they boost Iron and Nebius whenever NVIDIA invests in them. But still, I think the market's well aware that this is an obscene deal. But again, the media failed. The media failed to point out the fact that they're talking about building 800 megawatts of data center capacity in less than 2 years.
The media failed with Bitcoin, and the media failed with the crisis in 2020. The media always fails. You know why? Because journalists aren't that smart. If you get a journalist degree, you're not that smart. You're just not. Sorry.
Stargate Abilene. It's taken them 2 and a bit years to stand up 400, 300 megawatts of capacity. It's strange. It's like reality's occurring. It's recurring in like 4K. You're watching it, and then you go over to the media and they're like, yeah, it's an AI bubble. Well, NVIDIA's going to do this. How nice and real. And so it's just this continually frustrating thing where we have to just keep, like you and I and people like us, have to just saying the truth until eventually we are proven right. But I think even the markets are just completely, utterly tired of NVIDIA. They're tired of the NVIDIA story. They're tired of hearing NVIDIA is doing the circular financing. And also, NVIDIA's got desperate. It's just an insane thing to do. It's not a good. I think they thought that the key jingling would work on the markets again, and it just didn't.
So, specifically, in part of this deal is that $250 billion of debt to back for OpenAI that SoftBank gets to make the data center. But is that in addition to the $1.5 trillion of debt that hyperscalers need over the next 5 years? And then just quickly on the end of that, is there enough stomach for that in the markets?
No, this is the thing. So the $250 billion backstop is not actually debt. It's just NVIDIA saying, if this gets built, load-bearing if, and I know that's a Claudism, it came from my brain, load-bearing if there, like, okay, if this gets built, NVIDIA will backstop $250 billion worth of compute spend. That's just saying we will sign this off.
Yeah.
It's almost like a credit guarantee. The actual debt we're talking about is the $350 billion or more of data center construction costs and GPUs. The market does not have the stomach for that.
Yep. Now, think about this. NVIDIA is going to say, we're going to give commercial credit. We're going to back this up for OpenAI of $350 billion. Why isn't NVIDIA giving shareholders either stock buybacks or a dividend payment? Why are they doing this? Because they know that if they don't do this $350 billion deal with OpenAI, it's going to be, the cracks are going to start to propagate and the whole system of circular finance is going to crash. Now, what was the problem with Enron? They created SPVs, special purpose vehicles that were related to another one, that was related to another one, that was related to another, that really did nothing, but it just kind of moved money around. It was fakery. Now, there are things that are being built here. So it's a little bit like Enron, and it's a little bit like the Lehman crisis, thinking that you can just take off the risks off the balance sheet and not have to worry about systemic failure within the financial system. NVIDIA should be saying, you know what, we're not going to back this up. They can't, because once it starts to crash, then their stock's going to go to $100. It's not going to be at 300. It'll be closer to 100, and it's trading at 190 now. Maybe even below 100. Now think about what was NVIDIA? NVIDIA was a GPU company for gamers. And then all of a sudden, they're the hottest thing since sliced bread for AI. It's going to crash. It's going to crash.
Off-balance sheet things, the only reason Microsoft and Amazon and Google are able to, and kind of Meta to an extent, are able to do that much is because they have very good credit. I think they're in the top 25 of credit in the world. They have amazing corporate credit. SB Energy does not. NVIDIA has good credit, really good credit. But again, even the backstop of a big company, if you go and look around at the Google backstops, for example, they've done for Cypher and TeraWulf and this new $15 billion data center project that just got announced a day or two ago, they are backstopping billions of dollars, not $250 billion. Now, I've heard Lil Bird tell me that ratings agencies are not going to downgrade NVIDIA's credit over this.
That's crazy.
But that also is probably because the deal's not going to happen. But even then, it's a huge backstop. And I don't think the market has the stomach for $350 billion or even $30 billion worth of debt. I do think we could see Blackstone or one of the other private credit funds, the asset managers, I think we could see them say, okay, mate, yeah, we can pull this debt together. But I think what's going to happen, I don't know if it's this deal or another deal, I think we're just going to see a point at which they end up saying, okay, well, no. Just one day, the demand will not be there to fund this. I don't know when that is. I think it's going to be very sudden. I don't think it's going to be something where it's a slow boil. Maybe there are little signs like we saw with Amazon's recent bond sale. They only got 1.6 times interest. Usually you get 4 or 5 times the amount of demand for the bonds. They haven't got 1.6. I think that's a beginning sign. But I think the other thing is there's just gonna be a day when the asset managers try to raise the money and the market just says, not for me, thanks. I'm satiated. I don't need more of this risk. And once that happens, it will become impossible to raise AI data center debt. And the problem is as well, with all that HBM stuff, all the high bandwidth memory, with all the costs of RAM increasing, the cost of everything increasing, you're going to need more debt for the same amount of data center. Everything's getting way too expensive.
Just going on a little tangent on OpenAI, they dropped their prices for ChatGPT 5.6, cheapest model Luna by 80%, and its middle model Terra by 20%.
Yes.
Sort of combine that with the leak from Sarah Fry, the CFO of OpenAI, which kind of that leak may as well have been a press release, to be honest.
Oh, yeah.
Yeah. It claimed that OpenAI made more in July than all of Q2. And I was just wondering, those sort of things brought together, how do you explain what seems on the face of it like OpenAI is making record revenue and lowering costs as a result, when kind of if you take a little deeper look, it's kind of not really the case.
Jingle, 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 market, jingle, jingle, OpenAI's doing well. So that's the NBC story. I like those reports. I don't want to badmouth them too much, but that story was obtuse to say the least. So the story said the annualized revenue for OpenAI was higher in the month of July than the previous quarter. But the specific quote was worded so it was legally defensible to say that the annualized revenue, which is a month's revenue times 12, would be higher than the revenue, so the cash taken in the quarter before. If that's what they, to be clear, I'm willing to believe that maybe I'm wrong, but I think that the intention was to give a very muddy leak to the media. I think the intention was to allow people to interpret it in whatever way they wanted to, because you'll notice that story, which used the word revenue multiple times, did not include the revenue. So those price cuts, now, again, OpenAI, jingle, the day or two before, and they're like, wow, we used Sol 5.6 and it found these efficiency gains. It's incredible stuff. And then they dropped 80%. They didn't find 80% of cost savings. They didn't find that at all. We talked a few weeks ago, even a month ago, about the price cuts. This is what this is. This is a race to the bottom. This is an attempt to undercut Anthropic. And what's funny is DeepSeek V4 Flash just came out, which undercut OpenAI. And what's funny is people are like, well, this is just proof that inference is profitable because they can afford to do this. No, it's proof that they
move to self-driving themselves. You guys know we're talking about HP's self-driving network, right?
Yeah, of course, self-driving network.
I wasn't worried.
For a second.
No, it's proof that they're doing this. It's not proof of anything else. I think it's a sign they're getting a bit desperate. I think it's a sign that they know that organizations are walking away and don't want to spend as much money. And I just heard that Blue Origin, which is the rocket company for Jeff Bezos, just put a token cap on. Everyone's token minimizing. So they're trying to lower costs to kind of compete with Anthropic at a time when Anthropic is thoroughly boofing it. Like Anthropic is really, they've gone from having the mandate of heaven to having the mandate of the toilet. And so now OpenAI is trying to be the cool kid.
Let me just, this guy's pretty fun. Please go to my store, the-studio-reykjavik.com, and get the Gladiator Barley. This will help to build muscle. This stacks really well with the Myotrol. This will also help to soak up free radicals, bring down inflammation, so you're recovering from your workout quicker, and detoxify your body. It's a great supplement to take every day. And oh, by the way, you can give it to your pet. Give it, this is the scooper for humans, but for a pet like a dog or a cat, you want to give maybe a tablespoon amount, maybe a teaspoon, depending on the size of your pet. But this will help to bring down inflammation. So it's pet friendly. So for cats and dogs. So please go to my store, the-studio-reykjavik.com, and get the Gladiator Barley. Now, I use this to keep inflammation down and soak up free radicals and help to detoxify for my dog. And I've been doing this for a long time, and it works. Now, heirloom barley, it's very similar to the Gladiator Barley, but it doesn't help with building muscle. So if you want to build muscle and detoxify your body, bring down inflammation, soak up free radicals, get the Gladiator Barley. If you don't want to build the muscle, but you want to detoxify your body, bring down inflammation, and soak up free radicals, get the heirloom barley. And by taking either one of these, you're going to help to improve your immune system and endocrine system, help with your cardiovascular system, and help with brain function. Because by soaking up those free radicals and keeping that inflammation down, you're reducing plaque formation and you're reducing tangles and amyloidosis for the brain. So it's really important. And with better blood flow, you're helping your hippocampus. So please take my advice. If you just follow my advice, you will have some more money and you'll be healthier. It's really simple. And I tell you this stuff for free. Please go to my store and get the olive leaf extract. It's dual purpose. It's going to help to bring down inflammation. The olive leaf extract is dual purpose. It's going to bring down that systemic inflammation, but also help to control that lipid profile. Now, when you are controlling that lipid profile, you're bringing down your LDL levels and increasing your HDL levels, so you're reducing plaque formation. So you're helping your immune system and your cardiovascular system. by just taking olive leaf extract. Digestive enzyme complex helps to break up carbohydrates, proteins, and lipids. Helps to reduce the load on your pancreas. Helps you to absorb your nutrients with less stress on your digestive system. And digestive enzyme complex has bromelain. Bromelain is really important to help to break up clots. So it also helps with cardiovascular. Resveratrol. Resveratrol helps with youthful gene expression. Soaks up free radicals. Helps the health of the mitochondria, so you have more energy. You'll have youthful gene expression. And when you do that, your tissues will perform better. Resveratrol is very important for the basal layer for your skin, and it stacks really well with the C60, so your new skin cells will be healthier. And over time, you'll have better skin. Probiotics, super important to reset your gut biome, improve that immune system at the gut level. You'll have better sleep, you'll have better metabolism, you'll be able to absorb your nutrients better, you're reducing inflammation, and all these are very important to help with slowing down the aging process. Good health starts at the gut. So please go to my store, get the probiotics either in the veggie cap form or in the powdered form. And lastly, vitamin B complex. You're 40 years of age or older, the first 4 B vitamins in this complex will help with the electron transport chain, so you have more energy. You'll have faster cellular metabolism. And vitamin B12 will help to protect your neurons. Super important to take if you're 40 years of age or older. So please go to my store, use discount 5, and you get $5 off. All caps, discount 5.
Oh, look, but cheaper. Oh, look at this and that and the other. I would bet money that they've not found really any cost savings, and that an 80% drop is just an attempt to say, please keep using AI, please keep using this. I know it's not very, maybe it works for you, please keep using it. It's cheap now. What do you think? Maybe it is cheap, maybe it isn't. It doesn't really matter. I don't think that it's magically profitable. I mean, you kind of saw this with Kitty K3. The people on Twitter, they sound like people having like religious hallucinations. They're like, oh, Jesus is returning soon. There's like 80 to 90% gross margins on Kitty K3. They have no proof of this. This is just sitting there, just like trying to come up with rationalizations. But that's the AI bubble. The AI bubble is just a series of different ghost stories used to ignore financials. So I think OpenAI is price cutting, as we discussed a few weeks ago, as a means of trying to stop customers from quitting and probably losing a ton of money doing so. The 20% cut on the higher end model, this is not, I don't know. This doesn't strike me as the time to start cutting costs unless you're getting a bit desperate. If Anthropic cuts costs, by the way, we're in the hell zone. You know they're getting desperate because cost cuts tell me that they are scared. And they should be. They should be, because we are yet to actually get proof that this increases productivity. We're yet to really see that any of these are real businesses. And people really want open source to work and open weight models to work, which means you can actually truly adjust how the model works. They really want this to work. But no one wants to talk about no one wants to talk about the fact that all the companies are unprofitable. No one wants to really think about that too hard. Oh, it's just like Uber, it's just like AWS. Oh, look at the moon. The moon's telling me this is profitable now. It's fantastical thinking, because the reality of it, when you actually look at the numbers, is grim. And these companies, OpenAI and Anthropic, have over $1.1 trillion of commitments. $1.1 trillion. Anthropic next year, based on UBS's estimates, is going to spend $76 billion just on Google Cloud and about $25 billion on Amazon Web Services. How are they to bloody afford that? Like, what do people think is happening here? And so I think we're really going to look back on this era and start asking questions about like the basics of human intelligence. Maybe that's why people think LLMs are so smart, because so many people are so goddamn stupid about this.
I mean, if we go back to the NVIDIA deal then, after that very entertaining tangent, and you did mention it earlier, the SoftBank sort of, they raised, I think it was just shy of $1 billion in debt to kind of do up a 3 megawatt data center into a 70 megawatt data center.
Yeah.
The interest rate on that has increased by 2 percentage points, which more or less means that the confidence of SoftBank being able to pay its debt backs is falling. So if this NVIDIA deal goes through and it's a much larger amount of debt, how do you think it's all going to turn out?
Well, that's the thing. NVIDIA really does it. Like, NVIDIA should not be doing this deal because the company that this benefits is SB Energy, which is the subsidiary of SoftBank. So that SE Cosmos LLC, it's in my newsletter, that is for a former, it's not even a data center, it's a 3M campus that they're going to turn into a 70 megawatt data center. $999 million, forget what the coupon and all that is, but nevertheless, that deal had the guarantee of SoftBank Group, so the larger holding company, and it's still trading badly. And that's because SoftBank is a massively indebted company in the way that NVIDIA isn't. Nevertheless, $250 billion of commitment means that SoftBank has all the incentive in the world to build this entire data center, whether or not AI exists. They just think of it like this. If NVIDIA has said, yep, $250 billion will backstop this, SoftBank's going to build that as fast as humanly possible. They don't care if OpenAI lives or dies. They're getting $250 billion from NVIDIA, if NVIDIA can afford it at that point. So it really is just, it is a sign that NVIDIA is worried, and SoftBank's rubbing their hands together because right now SoftBank has basically no liquidity. Like they have, I should not say no. They are running out of liquidity. They're running out of access to funds, and they're running out of access to debt. And if they get downgraded any further, it's going to be even harder to get it. So their only way to find more liquidity is to take companies public or raise debt. They tried to raise debt on their OpenAI stock. It didn't work. OpenAI is not looking like it's going to go public anytime soon or ever. So they're not going to get the money out of that. So they sit there and they go, okay, what we're going to do? We'll take SB Energy public. They've been talking about that since May. If they sign a deal with OpenAI and NVIDIA agrees to backstop that deal, they will try and take SB Energy public and say, we have a $250 billion revenue backlog. They can say that legally now. This benefits nobody other than SoftBank until they buy the GPUs, then it benefits NVIDIA. Nevertheless, this could eventually lead to I don't know, I think this project doesn't happen or gets cancelled, but let's assume it actually builds in just this post-AI thing where just like NVIDIA just has this weird thing where they're selling. It sucks for NVIDIA. They sell $350 billion worth of chips, but now they have $250 billion they've got to give to SoftBank for no reason. The corpse of OpenAI is just lying on the ground outside. It's just a bizarre, it's just a sign that we're in the post-meaning economy. Yep. We're in the post-revenue economy. We just have this bizarre thing where this deal where it's like one company's like, I don't care whether OpenAI lives or dies. I get the money either way. Now, SoftBank kind of.
This is what I've been saying about it's very similar to Lehman. Oh, it's off of the balance sheet. Oh, you have secured your particular risk exposure. Doesn't that sound like those insurance policies that banks like or investment houses like let's say mortgage companies, mortgage lending companies, or even Goldman Sachs had with AIG. They took out insurance that if a certain debt wasn't paid, that they would get paid by AIG. And when everything blew up, AIG couldn't pay, just like an insurance company goes belly up if there's a mass disaster in a region. This is similar to Lehman. There's systemic risk. There's off-balance sheet stuff that's going on. There's these special purpose vehicles that are similar to, in circular dealings, very similar to Enron. This will be a business case at the Harvard Business School on how not to do something. It's very similar to Enron and the epoch of the Lehman crisis. But they're so smart. They're so smart. This is the reason why I say, pay attention to my show. I'll navigate you through it so you do not get exposed like everybody else. and you'll hopefully either be able to mitigate the risks that are starting to build up. And if you are a little bit more risk taking, you'll be able to profit from it. And at the beginning of the show, I said on how to profit from this. But this is very similar to this misunderstanding of systemic risk, a misunderstanding of circular connections, nodes within a community. These people, it's going to crash. It's going to crash.
I really can't. They need OpenAI to go public so they can take more margin loans out. But it's interesting that so little of everything, it's funny, we're talking 26 minutes, so little of what we're talking about is technology.
Yeah.
You notice that? We talk about, it's financial engineering. The technology they are creating is financial engineering. The AI bubble is not about AI. It's about financial engineering. It's about innovations in financial engineering. Sadly, the last time I read about financial innovations, I'm not being dramatic, you can look this up. The last time I heard the term financial innovation, and the place I've read it the most, is in coverage of the 2008 Great Financial Crisis. It's the only other place I've seen it. Financial innovation. Now, these are not derivatives. Derivatives are a very big and nasty thing. Credit default swaps were set up.
Technically, financial engineering was going all the way back to the tulip days with the futures of the tulips and for the Dutch. But in recent memory, it is lean. We have to be careful here. These financial engineers are going to blow up something. They're going to blow up the economy. You got to be careful. But the thing is that if you've been paying attention to me and you tactically look at the situation, you can make money throughout this drop. And when that's happening, that money that you're making, if you still are locked in for whatever reason in some equities longing, then you can buy in with that profit and get a better dollar cost average. So when the mean reversion does happen, you'll be able to capitalize. So you're capitalizing on the way down, and you can buy in at a lower point when it goes up.
Oh, but nevertheless, this is financial innovation. This is getting around accounting rules that really need updating. And I think this era is fascinating for that reason, in that it really isn't about, and never has been about, what LLMs could do. It's about the perception of AI's potential and what AI might do or could do or has done at any particular time, and thus what extrapolations you can make from that to sell something, to pump a stock, to sign a deal. That's a very bad thing. But again, it's not the same thing. The Great Financial Crisis increasingly became less about buying houses or the value of a mortgage. It became about revaluing assets based on what potentially they could mean as a bucket of bad loans that became a bucket of good loans. Again, much bigger, much more speculation. And it all deeply worries me, because once this cracks, once the bubble stops inflating and there's a little hole in the side and starts making little fart noises, what we're going to find is the AI companies won't have a magic trick. They don't have something they can do that will actually make people go, oh crap, this is worth investing in. NVIDIA does not have the ability to release a new product and say, wow, look how good this is. They tried Vera Rubin, they're trying to say it's 10x better, whatever the hell that means. It's always with DeepSeek, like an old DeepSeek model, R1, the one that came out in March 2025. So it's like Plato's allegory of the cave. It's just that what shadows might appear today and what meaning can I derive from them? And the problem is when things fall apart in a situation like that, when everything's speculative, it's very hard to use grounded things to boost it. And it's just incredibly dangerous for everyone involved.
And Topic has also just kind of made a similar backstop deal with AMD. What does it tell you about the sort of, and again, we have gone into this already, but the state of the wider industry, that these sorts of circular financing deals are quite so nakedly discussed and, I guess, like celebrated in a way.
Because this is the era of financial engineering.
As a delivery company, we rely on AT&T Business for fast, reliable internet every day, especially the busy ones. Let's turn it up.
We live in a world of systems, cities, subways, forests, even our phones. Our organizations are systems.
Because this is the era of financial engineering.
Before we continue on with the era of financial engineering, which will blow up the economy, never trust finance should be very boring. It's very, very boring. Anyone that starts getting fancy with the engineering, it's causing problems. It's weapons of mass destruction. And it's always predicated that you seem to know more than the market. The market, with its hive intelligence, is way smarter than a human being. The market is, let me repeat that. The market as a system is way smarter than any human being. So if you think you can outwit the market, you're an idiot. Now what you can do is sit back and watch the pattern and benefit from it. But don't get hubris to think that you know more than the market. The market always knows more than you do. Please go to my store, the-studio-reykjavik.com, and get the zeolite. Zeolite will bind to heavy metals, toxins, and chemicals, and allows you to urinate them out within 6 to 8 hours. Take 3 small drops underneath your tongue and drink filtered water. And what this will do is detoxify your body, and your immune system and your endocrine system will perform better, and your different organ systems will perform better, including your brain. So please go to my store and get the zeolite, detoxify your body. This zeolite you can use every day throughout the whole year, or you can do a heavier detox once or twice a year. It's up to you. But this zeolite you can take every day. Other people's zeolite, not so much. So please go to my store and get the zeolite. But beware of the financial engineering. It always blows up. Always blows up.
It's because AMD, this is the AI booster thing that I always argue with. AI boosters was like, oh, look at the revenues from the chip companies. Like, yeah, look at the fact that they have to pay themselves to get paid. That don't look weird to you? Does that not suggest there's not demand? Because just taking away my skepticism for a second, if AMD was selling enough GPUs, they wouldn't have to do this. They would have demand from real customers that would make these kinds of deals unnecessary, right? Like, it's not even me being a hater on this one. It's just, if they didn't need this, they wouldn't need, like, if they had tens of billions of dollars of demand outside of hyperscalers, they'd be like, sick, yeah, we don't need to backstop you. We have real customers. We have real customers, real boys. We don't need to sell to you, Pinocchio. We don't need to interact with these weird backstop deals. But at this point, there's like 7 different backstop deals. There's Google with TeraWulf, Google with Cypher, AMD with Crusoe, AMD with Anthropic. The NVIDIA one is potential, but we'll take it. NVIDIA's backstop with CoreWeave, NVIDIA's backstop with Lambda. Okay, it's way more than 7, isn't it? Broadcom's backstop of the Anthropic debt deal, $35 billion with Apollo for TPUs. Google's backstop of this upcoming data center. Oh, crap, I know there's more. That's the thing. The fact that I can't remember all of them is probably not a great sign. And it's just, AI boosters will say, oh, it's because we're in the vestigial stages. Goldman Sachs was on Bloomberg television yesterday. Someone from Goldman was like, yeah, you know, we're in the early stages of working out use cases for Microsoft Copilot. We are 4 goddamn years into this and at $1.1 trillion in CapEx. No, we're not in the early stages. Why do regular people not get this much affordance? And it's because they don't help boost stocks. And so, I mean, there's only 2 scenarios here. Either all of these backstops work out great and everything grows forever and I look like a moron, which I don't think is going to happen, or these deals end up being toxic, or they just never move forward. Like, AMD is in talks to backstop Anthropic. these kinds of things exist to make stocks run. Like, I hate to be cynical here. A lot of these deals, these backstops, are announced simply to make the stock pump. And if the stock pump doesn't work, they don't push the deal through. AMD was in talks to do the same thing, like I mentioned, with Crusoe. That's never come through. This NVIDIA deal. NVIDIA was going to, last year, Broadcom, 10 gigawatt deal with OpenAI, never happened. AMD, 6 gigawatt deal with OpenAI, never happened. SK Hynix and Samsung, 900,000 H3 RAM, high bandwidth memory, wafers a month, didn't happen. They just throw these things out to see what the market will do. If they carry through in them, terrible idea. It's just, I don't know, it doesn't look real. It doesn't sound real. It all sounds fake. It all sounds like fake money or fake deals to make stock numbers go up so that people feel that things are moving. When in fact, every time you hear about a backstop, that should be a screaming warning sign that the demand is not there.
Very recently, you told me that you think people are going to start saying and doing crazier and crazier things to prop everything up. And you said earlier, and you also said in your newsletter this week, that this deal with NVIDIA is the final boss of circular financing. And I just, having seen this news, I was wondering if you thought it would escalate this quickly, this fast? And then, could it get even wilder from here with the industry set to increase debt and capex next year?
Oh, 100%. I don't think this is it.
When you picture the future of work, what do you see? We see Keisha. After I sold my salon, I got an opportunity to interview with JP Morgan.
Oh, 100%. I don't think this is even the last one. Maybe it is, but I could see something crazier happening. I could see Oracle extending their deal with OpenAI to $500 billion. Let's put more RPOs on the top. I could see Anthropic and Google and Amazon extending their deals even further. I could see number being so huge. The numbers, wow, that's quite some number you got there. I also think this whole thing, the Hugging Face hack, I don't like this whole thing where, an OpenAI agent hacked Hugging Face autonomously. I mean, we're not going to share the prompt, or, it's also an unreleased model, so you can't look at it. We also won't say how much compute it used or what any of this means, because we have a history, by the way, of Anthropic at least, training their models to do bad things to prove a point with the blackmail thing. And now, it was funny, OpenAI says this Hugging Face thing happened, and it sounds like, this is just my personal opinion, they threw infinite amounts of compute about this, and they're like, we had no idea it was happening. If that's the case, OpenAI is one of the single worst run organizations in history. It means that they just don't know, because this thing was using unlimited compute. So they're just running up what would be millions of dollars of bills. I was like, we've got an unreleased model we're never going to release in the back. We're just going to have some fun. And we also don't know what it was told to do, how it was trained to do it. And then Anthropic yesterday came out with a thing being like, we also did this. This also happened to us. We checked 15,000 of our logs and we found 3 times where it did this. Wow. See? This to me is the same breed of crazy. This is an attempt to be like, look how strong we are. And the reason I believe this is Sam Altman himself said, I was a little bit surprised that there wasn't a bigger reaction. Why would you say that, Sammy? Sammy, little man. What do you mean you're a little bit Because the appropriate reaction here, and I realize he's a peculiar gentleman, the appropriate reaction, even for a peculiar sod, would be, this is a big deal. Like, I'm worried about this. I'm concerned about this. Being like, I'm a little bit surprised people don't. That just makes me think he knew. That just makes me think he announced this as a means of proving something, or worse still, did this deliberately. I think Anthropic, I don't trust either of these companies. So Anthropic being like, I also did this is just like, I'm like, okay, shut up, man. Like, we get it. You're not doing so good. Oh, nobody liked Opus 5. You want some attention. But I think what OpenAI did was they let this thing run rampant, saw it was doing stuff and went, see what happens. And people are saying, this proves the power of AI. It did the opposite. Like, it didn't do what they meant it to do. It's not clear why it did it. It's not even clear how it did it. And they're never going to give us the full picture. So I'm extremely suspicious of this stuff. Because if the answer is, wow, we found a way to spend millions and millions and millions of dollars to brute force hack something, pretty sure that doesn't economically work out. You could just pay hackers to do that. And also, how is this not illegal? Like that's the other. It's just like this. If a human being did what happened here, that would be illegal.
Yeah.
But because an AI model did it, and we need number go up, everyone's like, wow, I'm so scared. But that's again, it gets back to it. It's like we don't know what these companies are actually doing, and also if they are truly sitting around just letting weird little models that they're never going to release do crazy stuff connected to the internet, maybe we should shut down AI. I mean, you should do it for many reasons, but maybe now is a great time to actually do that. And I don't believe, by the way, this industry letter where they're like all signing it saying we should do a pause on AI. They don't mean that. They're just trying to sound important. I think this proves we should. Not because AI is so incredibly powerful, but it's clear they found an automation that will brute force hack something. That shouldn't be, we shouldn't be letting people do that. We shouldn't be allowing these companies to do that. We should regulate them out of existence. Also, I don't know. I'm taking one of these companies public. If I'm taking them public, I'm the lawyer on that deal. I'm going to add a risk disclosure saying, yeah, sometimes when we're experimenting on stuff, we might felony hack someone. That might be bad because that's the question at this point. It's what, like, how many of these experiments are they doing? Why are they doing experiments like this? Why are they doing experiments connected to the internet? And they'll answer with, oh, it's to make powerful AI models. If they can't make them safely, they shouldn't be making them at all. Yeah. And also, there's no money in this. This is not a profitable business. This is just a way to burn compute.
Well, on that note, as interim, thanks for taking the time.
Thanks for having me.
If you enjoyed today's episode,
A fad to some, the future of money to others. We see crypto's trillion-dollar swings, while others follow the noise. We follow the money.
All right. Before we do the final clip here, please go to my store, the-studio-reykjavik.com, and get the Boomer Boost. This has 68 nutrients. This has the vitamins and the minerals that you need to take daily, but it also has many other supplements that will help to slow down the aging process. You take this every day, it's going to rev up your metabolism. It's going to help with building musculature, weight loss. It'll also help to improve your cardiovascular health, soak up free radicals, bring down inflammation. You'll have a steady burn of energy. And by taking this every day, you will notice that you are slowing down your aging process and you are having more vitality. And you feel the effects of this in approximately 72 hours. You'll have a lot of energy and a steady burn of energy. So please take this every day. You can stack this with the barley, either the Gladiator barley or the heirloom barley. And you can stack it with also C60. C60, you get in a 2 ounce, a 4 ounce, or an 8 ounce configuration. It is cheaper per ounce to get the higher ounce configuration. You can get it in avocado oil, extra virgin olive oil, and MCT coconut oil. Now, when you use C60, what you're going to be doing is soaking up free radicals, helping the health of your mitochondria. You're going to have more energy. You're going to be able to soak up those free radicals at the vascular level and reduce plaque formation. At the brain level, you're reducing inflammation, you're soaking up those free radicals, you're reducing amyloid plaque buildup, and you are improving the connection of your neurons. So you're going to be thinking faster and have better memory. C60 improves the basal layer of your skin, so your skin will improve. And by taking C60 every day, a teaspoon a day, preferably on an empty stomach in the morning, this will help to improve your immune system and your endocrine system. Take it every day. And within 1 year, you will notice that you look younger and you will feel younger. You'll have more energy. You'll also recover after a workout quicker. I highly recommend that you stack it with the Boomer Boost for max benefit. So please go to my store, the-studio-reykjavik.com. I also have structural nanosilver toothpaste. It has no fluoride. It has the structural nanosilver that will help to neutralize. It'll whiten your teeth, freshen your breath. and reduce inflammation and improve your gum line. Really important. And I have structural nano silver gels, either in the tube form or in the quick dispenser. Dual purpose. You can use it as a daily skincare, put it on a wound, it'll help to heal the wound quicker. And during the cold season or the allergy season, you can lightly coat your nostrils. It stays active for 5.5 hours. Max 35 or cleanse. Take a teaspoon a day every day, swish in your mouth, gargle about 20 seconds, and swallow it. This will help to boost up your innate immune system. Super important. Do that every day. I've been doing that for over 6 years. Now, this stack here will help to improve your joint health. Collagen and the collagen. Now, collagen will also not just help with joint health, but it'll help with musculature, your skin, your nails, your hair, your bone density. So take collagen every day, super important. Now, collagen will help to remodel the joint from a sports injury or arthritis. And what this does is it helps to block the pain gatekeeper NAV 1.7, so pain will be reduced. It helps to reduce inflammation by blocking EP4, and it helps to reduce the erosion of the joint by blocking MMP3 and MMP13. And collagen helps to recruit the compounds that you need, the components that you need to help remodel the cartilage and remodel the cushioning of the joint. So take this every day and do these exercises where you're opening up the joint up to the point of pain. Let's say if you have an elbow issue, you open up to that point and maybe a little bit more, and then count to about 20 or 30 seconds and rest, and do that 2 or 3 times every day. And try to open up the joint a little bit more every week. And over time, you'll be able to open up fully, articulate fully with less pain. And by doing this exercise, you're sending microsignals to help to remodel the joint. By doing that exercise and taking the collagen and the collagen together, you have the compounds to remodel the blocking of certain enzymes to help remodel the joint, and also recruit the basic building blocks to remodel that joint. So exercise, a little bit of exercise, it's very low impact. The collagen and the collagen supplement. And it's a great way to remodel these sports injuries and arthritis. That's the product line that I am going over today. But let's finish up with just this short clip of Ed Citron on Bloomberg, I think it was Friday, about everyone has been sold a lie on AI.
In terms of the AI narrative, in your view, what's the reality?
Well, I think investors have to ask the question right now. What am I getting into when I invest in Microsoft, Google, and Amazon? So UBS estimates that 27% of Google Cloud's revenue this year will be OpenAI and Anthropic, increasing to over 48% next year. That is a remarkable amount of money. It's going to be over $124 billion next year. Everyone is buying into these stocks because they believe all of that capex is going towards diverse and spread out AI demand, when in fact what it's actually doing is helping create infrastructure for 2 unprofitable, unsustainable companies.
So the other one would be Anthropic.
Yes.
You argue. So give us more data, because you have you're citing Microsoft, but what about AWS?
Well, that was what I was saying. So Barclays actually says that this year, 13% of AWS revenue will be both OpenAI and Anthropic, okay, and next year will be 18%. AWS, much bigger business than Google Cloud. Now, just to be clear, when I was saying that 27% this year and 48% next year for Google Cloud, I meant both Anthropic and OpenAI. Okay. Most people don't know that OpenAI is a large customer of Google Cloud. It's not a well-known fact, but this was actually mentioned by UBS's Stephen Ju.
So where would those companies be right now without Anthropic and without OpenAI?
Well, I have serious questions about that. So in calendar year 2025, according to my own reporting about OpenAI's numbers, 69% of the year-over-year growth of Microsoft Intelligent Cloud segment was actually from OpenAI. Without that, it would have only grown 8% year-over-year, which is barely beating inflation. And so everyone is being sold what I consider kind of a lie. It's honestly kind of a scandal.
So this goes back to, I feel like we have companies, the circular financing, the circularity of it all, and kind of creating demand for their products. So when does it start? When does I asked this earlier with the guest, when does the party end in your view? Yeah.
So with OpenAI's IPO, I think that could be one of the flashpoints. Remember, this company was meant to go public this year. They filed about a month or two ago. And now the New York Times has reported that they are delaying until 2027. That's lethal for a number of people, but OpenAI and Anthropic need continual flows of capital. They do not pay their bills out of existing cash flow. So when anything happens to that cash, I think that's the first kind of domino to fall. But then again, there's also the overall problem of data centers just not getting built very fast, taking about 12 to 36 months, depending on how small or large a data center is actually being built at. And the problem is that everyone believes that AI is coming out of cash flow, that AI is coming out of just this diverse revenue base. And it's really not. It's extremely narrow. The information reported a few months ago that 89% of the largest AI companies, well, their revenue comes just from OpenAI and Anthropic. It's heavily centralized.
Doesn't it have to be centralized to some extent? This is expensive to do or no, in terms of data center build out and so on and so forth. And what's going to make AI, generative AI, the ability for it to be really, really good is having access to lots of information. So doesn't it have to be to some extent, Ed, concentrated?
Well, when I say concentration, I mean concentration of revenue in these two companies.
No, I understand, but to make it good, so doesn't it make sense that those who are exposed the most, it's going to be concentrated to some extent?
Well, I mean, when we're talking about, so Sightline Climate said that they saw back in February about 190 gigawatts worth of data center capacity being built in the next few years. It's built or under planning. Now, if you work that out with a PUE, so just the efficiency rating of 1.3, you're coming out to 12 million a megawatt, over $1.6 trillion of annual revenue needed to satiate those data centers. Having two customers is not going to do that. Even at their most spendy, Anthropic and OpenAI, well, they can't afford anything. They need venture capital, but they're only going to spend $400 billion a year. And that's if they get that far, which I don't believe they will.
How much do we know about their balance sheets, really? Really?
Well, I from personal experience a great deal about OpenAI, because I reported their audited financials for the Financial Times.
Right.
And it's a company just burning cash. They lost $20.9 billion in 2025, and things are only getting worse. And what's crazy as well was over $800 million of OpenAI's revenue came from SoftBank for their Cottrell Intelligence, and yes, that's really what it's called. Their Cottrell Intelligence program, which I can find no evidence of actually anything happening. And SoftBank, a large shareholder of OpenAI with no board seats.
Go ahead, Joe.
And the camera can catch you. See it. I say, look behind you, you turn around, it disappears. I see it.
For a long time, crypto felt new, unfamiliar, hard to access. Then came ETPs, helping bring spot crypto exposure into traditional group.
Go ahead, Joe.
One more question though. Like you talk about for Google Cloud, the exposure, right? And you said 48% next year in terms of these two customers. I have to say that there are smart people running these companies. And normally you would say your exposure to just a handful of customers is not a great thing. Do you say that these companies that aren't doing their due diligence, be it Alphabet or, pick your hyperscaler?
I think they did their due diligence in the sense that they said, we are going to create our largest customers. We're going to own large parts of them. And on top of that, we're going to own all of their infrastructure. Google has they have a nice thing going here.
Yeah.
They buy TPUs from, Broadcom sells TPUs to Google. They are then sold to Anthropic and then rented back to Anthropic through Google. Google gets to double up on revenue. This sounds really good right up until you realize that Anthropic and OpenAI are unsustainable. Yeah. So what they may be, and the problem is with saying these are smart people, is it immediately makes me think of Enron, the smartest guys in the room.
Yeah.
Not saying anything like that's happening.
But I'm just saying you have a fiduciary responsibility. And you're right.
Yeah.
You go back to Enron or
Sure. I think the point I'm making is, with Google, they probably thought there would be more customers. I imagine with Azure and with AWS, they thought would be more large players. The problem with Anthropic and OpenAI is they've raised $200–300 billion of funding, but they've actually raised more because OpenAI and Anthropic got all of their infrastructure built for them by Microsoft, Google, and Amazon. They didn't have to pay, I think, in the Sam Altman, Elon Musk trial, one of the Microsoft executives said that they cost $100 billion, so call it like $70–80 billion of infrastructure.
Yeah.
So the problem is that nobody else can get as big as them. No one else can get that much compute. No one else could afford that compute and have the chance to do the pre-training runs necessary. Except now China's coming up behind them.
Right.
And it's unclear how anyone really deals with any of the problems I've been listing for years, which is unsustainable, unprofitable, and also not really finding the ROI in AI.
We're speaking with Ed Zitron, the CEO of Easy Primary Research, who joins us on set in the Bloomberg Interactive Brokers studio. Ed, play this out for us, because I think a lot of people think, okay, for there to be some sort of ROI on this, one thing has to happen. And like the best case scenario for all this money being spent is that productivity increases, fewer people are needed to do more things. There are some serious implications if that were to come true, and to the labor force. And Dario Amodeo of Anthropic has talked about this in the past. Maybe he's talking in his book. I don't know. The other side of this is, well, if that doesn't come true, then what does it mean for these stocks that have gained so much on hopes that they would be responsible for some of this productivity increase? Like, how does the shoe drop? What happens?
Well, the thing is, if you think about what Amazon, Google, and Microsoft have done, and Meta to some extent, but they're not selling compute capacity yet, is they have gone from being these cash-heavy, these cash machines. They just spill out money, low cash burn, high revenue, low assets, into these bulbous GPU-filled asset mongers who are just full of these semi-built data centers for 2 customers or 3 customers at best, so that they can do what? Rent them out so that they can rent their models. And it isn't really clear what the plan is at this point. And the problem is, for me to be right, it doesn't even have to go that badly. OpenAI and Anthropic have to grow so large to be able to make all of this data center capacity good. I mean, Google's, I think, the UBS estimate was like $76 billion in 2027 of Google Cloud's revenue will come from Anthropic. How's Anthropic going to afford that? They burn tens of billions of dollars. So it's not just that these companies are unprofitable and unsustainable, but they have to grow so very large to make AI pay off, because otherwise there just isn't demand for compute at scale.
Ready? Here we go. Okay, first day, PV, MJ, drop off, Christoph, lunchbox, mom rock, snap test, recess, new fun fun. Backpack, quick snack, I'm back done. Give a little Sarah Lee love.
Get this exceptional offer on a 2026 Cadillac.
That's the end of the broadcast. Please go to my store, the-studio-reykjavik.com. Get the great products that I offer. These are supplements that I take every day to help slow down the aging process and to have more vitality. They work, they're very effective, and they're affordable. And it's something that I do, and I've been doing it for a very long time. In addition, watch my live shows. If you pay attention to what I'm doing and my perspective on the market, you'll be able to mitigate the risks that are coming. So you're going to be able to make some money and you can get healthy. Please go to my store, the-studio-reykjavik.com. Make sure you subscribe to all the channels that I have. I have YouTube, Brighteon, Bitchute, and Rumble. Thank you for listening and have a nice day.